Imagine a market where everything you know, real estate, artwork, contracts, commodities, corporate economic rights, can be digitally divided into accessible, tradable fractions, all recorded with full transparency. A market where you no longer need to deal with heavy bureaucracy to transact real-world assets, because everything is validated within seconds on a global infrastructure. Sounds futuristic, right? But this transformation is already happening, and it has a name: asset tokenization. And the question that has been keeping many people in the traditional markets up at night is very simple. How is the global financial system, with all its history and structure, reacting to a shift that promises to redesign the way assets are traded? Guys, I am Chad from Zero Markets, and today we're going to talk about a movement that's gaining momentum in several parts of the world: the tokenization of assets and the use of blockchain technology to modernize markets that were once slow, expensive, and inefficient. My promise is that you'll leave this video at least 1% more critical on this topic, something that's essential in the career of successful traders. When we talk about asset tokenization, we're not talking about speculative digital coins or short-term trends. We're talking about the digitization of real assets, truly real assets, using blockchain as the infrastructure for recording and settlement. This means representing a property, a security, a commodity, or even revenue streams in the form of tokens, which allows them to be traded faster, cheaper, and with greater transparency. And here's where curiosity comes in. How is a market so traditional, so regulated, and so accustomed to lengthy processes reacting to the fact that there's now a technology capable of making everything more efficient? The first thing the traditional market realized is that blockchain isn't about replacing institutions. It's about transforming processes. A property record that used to take days to verify can now be confirmed in minutes. An asset that previously could only be traded in large lots or blocks can now be fractionalized into small digital parts, making access more democratic. That's why global banks, major asset managers, and even stock exchanges have already begun testing asset tokenization projects within their own infrastructures. And it's no surprise that you're seeing more and more headlines about pilots involving tokenized bonds, tokenized debt, tokenized real estate. And the logic is simple. If the market can increase liquidity, reduce costs, and gain operational efficiency, it will pursue that path. And yes, the traditional market isn't just reacting, it's moving really fast. Institutions are creating dedicated departments to understand how blockchain, defining internal security standards, exploring technological partnerships, and analyzing how to integrate tokenization into systems they've used for decades. But there's an interesting point of curiosity. While there is enthusiasm, there's also caution. Regulators around the world are trying to understand where asset tokenization fits within existing frameworks. Traditional financial institutions are evaluating operational risks, custody risks, and interoperability risks. The technology is very promising, but the transition needs to happen without jeopardizing structures that move trillions every day. According to Mordor Intelligence, the asset tokenization market is projected to reach $2.08 trillion in 2025 and grow at a CAGR of roughly 45.5% through 2030, reaching around $13.55 trillion. If this video is making sense and helping you stay sharp about how this technology may shape the future of markets, hit the like button so YouTube knows you want more straightforward, smart content. And of course, please subscribe to the Zero Markets channel to keep up with everything that's transforming the global market. Asset tokenization and blockchain are opening a new chapter in global financial markets. The discussion is no longer about if this will be part of the future, but how these structures will integrate with what already exists. The traditional market, far from rejecting innovation, is absorbing the concept, testing practical applications, and creating hybrid models that combine institutional security with technological efficiency. In the end, tokenizing assets isn't about creating new parallel markets. It's about improving the market we already know. The technology is offering speed, transparency, and access, and the institutions that will understand this sooner will be better positioned for the future. The reaction of the traditional market shows exactly that: adaptation, strategy, and calculated movement towards a new phase of global financial infrastructure. That's it. So, did I keep my promise in making you at least 1% more critical on this topic? If this content helped clarify what's happening in the world of asset tokenization and how the global market's adapting, go ahead and subscribe to the Zero Markets channel and keep following our smart, straightforward analysis, always designed to keep you one step ahead. And if you want, follow us on Instagram @Zero Markets for fast and direct content over there as well.